Hey there, fellow investors. It's your host, Eden, and I warmly welcome you to my channel, Rich Life. Today, we've got an electrifying topic to dive into: cracking the stock market code, strategies for success. If you're eager to unlock the secrets of the stock market and maximize your profits, you're in the right place. But before we jump into it, make sure you hit that subscribe button and ring the notification bell so you never miss out on our financial wisdom. 1. Do your homework. The first strategy we'll explore is the critical importance of doing your homework before diving into the world of stock market investing. Think of it this way: you wouldn't embark on a cross-country road trip without a map or GPS to guide you. Similarly, in the stock market, having a solid understanding of the companies you're investing in is your navigational tool to success. This involves delving deep into their financials, studying their quarterly reports, and meticulously researching their competitors. This diligence provides you with a comprehensive view of the company's health, performance, and competitive positioning in the market. Armed with this knowledge, you're better equipped to make informed investment decisions. It's like having that trusty map on your road trip, ensuring you stay on the right path and avoid costly detours. By making informed choices based on thorough research, you build a strong foundation for your investment journey, increasing your chances of success in the dynamic and sometimes unpredictable world of the stock market. 2. Diversify your portfolio. Strategy number 2 emphasizes the importance of portfolio diversification in your investment approach. To put it simply, it's the age-old wisdom of not putting all your eggs in one basket. Just as a skilled gardener wouldn't plant all their crops in a single patch of soil to mitigate the risk of a crop failure affecting their entire harvest, an astute investor should spread their investments across different sectors and asset classes. This diversification strategy serves as a protective shield against the inherent volatility and uncertainties of the financial markets. By holding a mix of investments, if one sector experiences a downturn, the potential losses can be offset by gains in other areas of your portfolio, thus reducing the overall risk. This approach aims to provide a more consistent and steady return on your investment over the long term, aligning with the principle of not relying too heavily on the performance of a single investment or sector. In essence, diversification is like having a well-balanced diet. It ensures you're not overly reliant on one food source, safeguarding your financial health and promoting a more stable and secure investment journey. 3. Have a long-term mindset. The third strategy is nothing short of a game-changer in the world of stock market investing. It's all about cultivating a steadfast long-term mindset. Picture the stock market not as a magical get-rich-quick scheme, but rather as a marathon, a journey that requires endurance and patience. As Warren Buffett, a legendary figure in the investment world, eloquently puts it, the stock market is designed to transfer money from the impatient to the patient. This profound wisdom underscores the idea that attempting to time the market or make quick profits through daily trading can often lead to disappointment and losses. Instead, the focus should shift towards embracing a long-term perspective, where investments are chosen with a horizon that spans years, if not decades. Such an approach aligns your investment strategy with your long-term financial goals, allowing your assets the time they need to grow and flourish. It acknowledges that the stock market's daily fluctuations are a natural part of the journey and shouldn't be a source of anxiety or impulsiveness. In essence, adopting a long-term mindset is akin to recognizing that wealth accumulation is a gradual and deliberate process, akin to tending to a garden, where the fruits of your patience and discipline ultimately yield the most bountiful harvests over time. 4. Stay informed. Strategy number 4 is all about staying well-informed, a crucial aspect of navigating the ever-changing landscape of the stock market successfully. Just as a skilled captain keeps their hand firmly on the ship's wheel to gauge wind, currents, and potential obstacles, investors must keep their finger on the pulse of the market. This entails actively following financial news, immersing oneself in investment blogs, and even considering participation in an investment club or community. The rationale behind this strategy is simple: knowledge is power. The more you know about the companies you invest in, the broader economic trends, and the geopolitical forces that shape the financial markets, the better equipped you'll be to make informed and intelligent investment decisions. Staying informed provides you with critical insights, allowing you to anticipate market movements and identify opportunities or potential risks. It's akin to having a detailed map and real-time weather updates for your sea voyage, enabling you to chart a safer and more profitable course. In a fast-paced and information-driven environment, staying well-informed is not just an advantage, it's a necessity for investors looking to thrive and adapt to the market's ever-evolving dynamics. 5. Risk management. Strategy number 5, risk management, serves as a foundational pillar in the realm of stock market investing, underlining the significance of safeguarding your financial well-being. It's akin to ensuring that your ship has robust safety measures in place before embarking on a journey. Firstly, it's imperative to never invest money that you can't afford to lose. This principle underscores the importance of only allocating funds that, if lost, wouldn't jeopardize your financial stability or well-being. Additionally, setting stop-loss orders, akin to having life jackets on board, becomes essential to limit potential losses. These orders automatically sell a stock when it reaches a predetermined price, helping you mitigate losses during market downturns or unexpected adverse events. Furthermore, an astute investor steers clear of allowing emotions, particularly fear and greed, to steer their decisions. Fear can lead to panic selling during market turbulence, crystallizing losses, while greed can foster a reckless pursuit of unrealistic gains. Both can prove detrimental to your financial goals. Instead, the focus should be on preserving and growing your capital steadily over time. It's not merely about how much you make, it's equally, if not more, about how much you can retain. In essence, this strategy embodies the wisdom of safety first in the investment world, where the priority is to protect your capital, ensuring that you're well prepared for the journey ahead and capable of navigating through the market's often turbulent waters with prudence and resilience. 6. Patience and discipline. Strategy number 6 underscores the fundamental principles of patience and discipline in the realm of stock market success. Emotions, notably fear and overconfidence, can pose significant hurdles in the world of investing. This strategy emphasizes the importance of unwavering commitment to a well-structured investment plan, irrespective of market conditions. Fear often tempts hasty decisions during market downturns, resulting in the realization of losses and missed recovery opportunities. Conversely, overconfidence can lead to abandoning prudent risk management practices in bullish times, exposing portfolios to undue risks. However, disciplined investors remain resolute, grounded in their well-thought-out plans. This approach acknowledges market fluctuations as intrinsic, beyond one's control. By adhering to discipline, choices remain rational, mitigating emotional influences. It embodies the wisdom that slow and steady wins the race, positioning for long-term success amidst market turbulence. In essence, this strategy reminds us that investing is a marathon, where consistency and deliberate actions lead to triumph over time. 7. Stay adaptable. In addition to the previously discussed strategies, it's crucial to emphasize the importance of adaptability in navigating the ever-changing stock market landscape. The financial markets are dynamic, and what proves effective today may not hold true tomorrow. Therefore, staying open to adjusting your investment strategies as market conditions evolve is paramount. Flexibility, the ability to pivot when necessary, can be a linchpin for long-term success. By recognizing that the market's terrain can shift unexpectedly, you empower yourself to make informed and timely adjustments to your portfolio, ensuring it remains aligned with your financial objectives. This adaptability allows you to seize new opportunities and protect your investments during changing tides, ultimately enhancing your resilience and potential for sustained growth in the ever-evolving world of stock market investing. There you have it, folks, the key strategies for cracking the stock market code and achieving success. Remember, the stock market isn't a guaranteed path to riches, but with the right knowledge and mindset, you can build wealth over time. Now, before we wrap up, drop a comment below with your favorite stock market strategy, and let's get a conversation going. And if you found this video helpful, give it a thumbs up and share it with your fellow investors. Thanks for tuning in today, and I'll catch you in the next video. Happy investing!